What's up, guys? It's Flash. It's Friday, August 16th, 2:15 p.m. Eastern. I'm looking at the S&P 500 right here, and I want to kind of bring something to everyone's attention. The indicator I often look at is the distance percentage from the moving average. And this is I typically have this at like 36 because it's the 3-year moving average when we're at the monthly. But so when we're on the weekly, in this case, it's the 36-week moving average that this is the percentage distance away from. And so some things I'm noticing, recently in the S&P is, we'll kind of get this rounded top in terms of momentum, and we kind of have another one right here. But what you'll see is like this gives hints on when the S&P is kind of breaking down, losing steam, losing momentum. And then towards the end of the arc, there's kind of this final breakout line here where, okay, this is done. It's pretty much going to break below the zero line, which in this case is, the moving average itself. And then it, goes into a little bit of a bear market. So that's kind of what I'm expecting. And I think, this still has some time to kind of similar as it did right here. It still has some time to kind of inch up a little bit. So I still think the S&P can kind of inch up. But as you can see, this thing is running out of gas. That's pretty much a good metaphor for it. It's running out of gas, running out of steam. And I think I have a vertical line here. This is December 30th, 2024. Back here it was December 30th, 2024. Like, it looks to be that, with the election coming up, there could be this mini bear market, or maybe it's a bigger bear market. We gotta kind of play that by ear, so to speak, when we get there. But something kind of a little hint or a little trick, like other times, if we look at like a sharp pullback like it was in 2020, there wasn't really a warning sign, other than, C19. So just something to keep in mind, something I've picked up. We can look at gold as well. Gold on the 3-day. I have some previous fractals here from the last couple bull runs. Like, I think this thing is super strong. It looks like it's breaking to the upside out of an ascending channel. It's breaking some, resistance lines on the momentum. So I think this has a lot of strength, a lot of legs. And we're kind of, that kind of backs up the, gold to SPX ratio. We'll go on the monthly for that. This is the turning of the ship that I've been talking about, from a momentum perspective that's also breaking out. So gold, I think, is going to start outperforming. We'll see how long it outperforms for, right? Our thesis is kind of like, hey, for the next 5 or 10 years, gold is going to be the dominant factor. And that's ultimately going to drive capital flows into the commodity complex. So uranium, oil, gold, silver type equities. Another way I'm thinking about playing this is UGL. Again, not financial advice. UGL is a leveraged ETF to gold. It's 2x. It aims to get the 2x percentage gain per day, right? So we can talk about volatility decay or the fees that require to be in this fund, but I think this could be a really interesting play where if gold's going to be in a long bull market, we could maybe sprinkle a little bit into UGL, which, you don't want to put your entire account into it. I'm not sure, I don't think, but this could give you some alpha or some, leveraged gains to this gold bull run. Same thing with AGQ, which is the 2x silver ETF. I think this could be a possibility to play as well. Like, the percentage gains on this thing are just astronomical. So just something to keep in mind, keep your eye on. But ultimately, it's the S&P 500. And I still think we have a little bit more before we run out of gas, probably the end of the year. So take that for what it is. Drop me a like, drop me a comment if you have any questions. I'll see you guys in the next one. Have a good weekend.